Guys, I want to talk about another big story in the market today, in addition to what's happening in stocks and the volatility. Oil. I mean, oil's now down for 12 days in a row, which has never happened. And when we were on yesterday when it closed, we said it was down for 11 days in a row, and that had never happened. So it continues. We're at 57.52 now, but this today's a big decline percentage-wise. So it's at 4% to be down $2.42 on a barrel of oil. So let's bring Larry Shover into this conversation out at the CME in Chicago. Boy, talk about today and the sell-off, Larry, that we're seeing today. What's happening?
Well, what's happening is just a giant washout. I mean, I think a lot of it is people are surprised that OPEC is surprised by the developing surplus, given that most of it came from them, and they were producing at pre-2016 levels. Adding on top of that, we had a lot of stabilization come out of Libya that helped the price. Let's keep in mind that October 3rd, we grazed a 4-year high, but we're right now, we're oil price now is where it was toward the beginning of the year, and that was a workable price where it's still profitable for the United States to develop oil, produce oil, and make up for some of that spare production.
This is another issue, guys, Jim, that the president obviously got involved, well, he's been involved in just about everything, but he got involved in this yesterday with that tweet, and he's trying to talk down the price of oil. It is interesting to see what does Saudi Arabia do next? What does OPEC do next?
Right, and I think what you're going to see is some reduction in output, but not one that's so dramatic as to be disruptive to the relationship with the United States. But here's the important point: declining oil has positives and negatives. Certain parts of the economy do. What you want to watch is the junk bond, the low-rated oil companies that have debt outstanding. If the spreads start to widen and people start to, the price goes down so much, people start to worry about the viability of the highly leveraged, low-quality oil companies in an era of rising rates. That could ripple through the credit markets.
We're not seeing that yet.
We're not seeing that yet, and it's very important. I've always said that one of the things that could hurt, to derail the economy and the markets, is if you get a deterioration of the credit environment with the Fed raising rates. You have not seen it yet. It's important that you don't see it. So I think a stabilization in oil prices at these levels would be very helpful.
Well, you take, Larry, that point about the pros and cons of oil from an economic point of view being as low or dropping as much as it has. I mean, obviously the president thinks it's a good thing and it helps consumers and gas prices are low and all the rest. And then, you know, others say that this isn't a good economic sign. Larry, where do you come down on that?
Yeah, no, I think it's a good and great thing. I definitely support the president in this. Oil doesn't need to be $75 a barrel. I think the question mark is what's the long-term strategy for OPEC? That's where it gets confusing. I think they're traders, and I think they base the meeting on December 6th that's coming up. It'll be based on where the price is today, not where they think the price should be a year from now. So something to really watch out for.
You have kind of two things going on, though. You have a short-term expectation problem. Remember, before this 12-day remarkable sell-off, you had an increase in oil prices because the sanctions on Iran were expected to cut production. Then we offered 7 countries, I think it was, exemptions from that. Those can be changed, by the way, and that could change the market overnight, right? So I think that's a problem. And then you have these long-term discussions, like the IEA came out talking about how cars weren't going to need gas down the road. I mean, all these sort of long-term views that oil demand over time is not going to be as robust as we think it is. Look, I've been following this industry for over 30 years. It's a self-correcting mechanism. Basically, if oil prices go down much more, you're going to see a cutback in production in the U.S.
Ryan?
Yeah, I mean, I think you made a good point there, Liz. It's a very volatile asset class in the sense that you got to remember we're still 30% over last year. I mean, even with a 25% correction, you know, oil is still up significantly. And I also think that, going back to China, if we can get a deal with China, that's really weighing on commodity prices right now. So I think if some deal gets made at the G20 summit, I think that could also push oil prices up, and I think OPEC is definitely going to cut. So I think there's a lot of reasons why oil is going to bottom here soon.
No, it's the other thing the IEA said was they made some comments or put some numbers to what I think we already all knew, was that the United States is a bigger and bigger player in the production of oil and gas. The number was the U.S. is expected to produce half of the global oil and gas output by the year 2025. Larry, what about that from a perspective, you know, of national security? People have brought it up. But also, the reason it's happening is because all this fracking that's going on in places like Texas, for example, in West Texas. And, you know, those guys that are in the fracking business, they need a price that doesn't fall too much, right, in terms of profit margins in order to make money. So there is a balance here. You don't want the bottom to fall out, do you?
Yeah, no, you don't. But also lower prices do help with ingenuity about getting out of the ground cheaper, better. But to your point about producing half the demand growth in the world, that's an admirable goal by 2025. And I just don't think we'll see it by 2025. And I hope I'm wrong.
Right.
But that said, I think we're a long way off.
All right, guys, good discussion to start us off today. The Dow, by the way, is now, I think, higher, right? Yeah, it's up 27 points. Only Jim Awad knows what it's going to be at the end of the day.
At the end of the day?
Yeah.
I wouldn't be so. I have no idea, but my guess is the long-term trend remains moderately positive. But if there are risks, it's to the downside.
That's it. Oh, you've been on business TV a lot.
No, I'm not trying to hedge. But I also know what I don't know.
Safe answer, Tim.
Oh, how important is that?
Yeah.
More people should be in that boat. Thanks, guys. All right, we're going to move on.